What's up guys, and welcome to Drive to Thrive. You might be wondering, hey, I've seen this setup just recently. How come you have the same cup, you have the same shirt, same hat? Well, guess what? I am recording everything in the same day and I don't really feel like going to change, so I'm just gonna stick with this. But hopefully you find some value in the video I'm about to tell you guys, because in today's video I want to talk to you about a simple strategy or a simple tool you could use to figure out if you should be holding on to your stocks and what stocks to be buying here in the long term. So this will be quick and sweet video guys, but I've mentioned this trick previously in my other videos. Now if you haven't seen those, don't worry, I don't blame you for it, but hopefully you enjoy this one. Now let's get started. Alright guys, so there are plenty of stocks this year that have been getting absolutely hammered. Now, how do you know if you should be holding on to those stocks or just taking an L, do a tax law harvesting? You know, that season is right upon us right now, and ditch those stocks and look for some better stocks here and next year. So how do you figure that out? Well, my trick is I like to go over to investing.com. So let's type in investing.com. And this will bring us over to this stock. Now, let's say you're holding on to, let's go over to my list right now. Let's see what has been getting destroyed this year. So let's see, something like Affirm. Affirm has been absolutely hit this year, massive losses. So let's say you're holding on to a Affirm stock and you're wondering, should I be buying some shares here? It looks like we're bottoming out around that $15. Is this a great company? So what I like to do is come over to investing.com, type in AFRM, and then go over to financials. Now under financials, you will get these numbers. So what I like to look for is margins. What kind of margins is this company operating on? Now, as you can see, gross margins are looking good, but operating margins are negative. Net profit margins are negative. Return on investment is negative. Let's see, their debt to equity, 168%, pretty freaking high. And operating cash flow, positive cash flow though. So 2 out of the 3 parameters that I like to look at are negative. So to me, Affirm would probably be a scrap. I wouldn't be holding on to this stock, especially with recession around the corner. People are probably going to be ditching and not paying off their Affirm, loans that they took out. So again, Affirm probably not something I'd be interested in. Okay, let's go over to Uber. Uber again looks like it's been getting hit here. We're sitting down at these lows. Maybe let's go over to our weekly chart. So again, up in this resistance area, let's type it in. Let's see what Uber looks like. Now again, same scenario, go over to financials. And on here, let's see, so our margins here, again, gross margins are positive, operating margins are negative, net profit margins are negative, return on investment is negative. Let's see, their debt to equity, 180%, and their operating cash flow is about 4% positive. So again, 2 out of 3 are negative. Again, I'd be staying away from Uber. Let's see, another one down here. Let's take a look at Zoom. Now I know Kathy Wood has been buying more Zoom. She likes this stock. Now let's see, what do I think as a non-financial advisor? So let's go ZM. So at a quick glance, financials, and let's see, let's take a look at these margins. Okay, so here we go. Operating margins, net profit margins, gross margins are looking positive. Return on investment, 13%. Total debt to equity, 1.63%. And their operating cash flow is positive. So check, check, and check. Now I could see why Kathy Wood is buying Zoom at these prices, because you know what? It's looking pretty good. Their margins, their debt is low, their cash flow is looking good, and we are sitting at these all-time lows, even looking possibly here to bottom out at around the 74. So I would move this even a little bit lower down to the $63. So Zoom actually looks pretty enticing as a long-term investment. So if you believe in this company, maybe something to research a little bit further. Now let's go look at these bigwigs. Google, for example. So Google, again, nice big pullback here. Overall, still in the bullish trend. So let's see, GOOG, Google Alphabet. Let's do Class A shares. Financials. Let's take a look. So again, operating margins, gross margins, net profit margins, return on investment, all looking good, positive. Total debt to equity, 11%, so low, and operating cash flow, 35% positive. So again, Google, really good company, really good long-term investment company, especially after this carnage here. So this is just a quick video to show you guys, and you should be able to take all of your stocks in your entire portfolio, go one by one and do this quick exercise. This will give you a really nice idea if you should be sticking with the stock or if you should be dumping it. If you believe that the company will do good, but their margins and their debt is through the sky, well, guess what? They might be getting into some trouble here as time goes on, so might not be the best stock to, buy into, but possibly maybe you have another stock that you'd like to buy more shares, but you're not sure if you should be dumping money and everything checks out. Well, probably is a better investment. So anyways, guys, quick and short video. I hope you found some value in this video. If you did, give it a thumbs like. Otherwise, see you in another one. Cheers.